This trade that I took today, just go over the price action. My entry was here, boom, stopped out right at the low of the day, and we fucking rallied. Crazy. See the turtle soup? Entry down there. Now, what could I have done better? Well, first, let's go into the trade analysis, right? So we're going to go into bar replay, and we'll start at the 9 o'clock open. Okay. So, yesterday, Monday, we had a huge scare, huge sell-off, big new week opening gap, DeepSeek AI scares, NVIDIA drops like 13%, sends price barreling to the downside. Fade the sentiment, like the panic, fade the panic. Everybody's panicking. Bullish day, right? Weekly open right here. We're expecting a weekly open, low, high close. Since that was such a big move to the downside on Monday, I'm expecting this to be the low of the week. And so I'm expecting bullish price action for Tuesday. Now, let's mark out the key times, right? So we have 5 a.m. All right, this is just like all my other analysis. We do 1. We already have midnight marked out, and we'll mark out 1 p.m., right? Here is the low of the 5 a.m. candle. All right, and then we'll mark the high of it. Why did I use that in this range and not the other one? Well, if you look at the 1 p.m. range, let's mark it out with this. There's the low of the 1 a.m. range, and the high comes in right here. So the 5 a.m. range, 5 to 9, took out the high of this and the low. So it engulfed that whole entire previous candle. So this is the range we're trading in. You can see this is all consolidation, just sideways price action. So what we want to do is we want to buy below lows. So let's mark out key liquidity points. Well, you can see here we have these equal highs. It got taken out. So there's our buy side. All right. Price moves from buy side to sell side to buy side. It just keeps fluctuating. So my key level for this trade, what I had marked out, was we have this low Monday to this high right here that took out this. So that's our dealing range. So we're going to mark that out with our fib. And we get our, actually that's not what I used. I used this price leg right here. Because this price leg, boom, liquidated this low, took out and liquidated that high. So it was like it took out this range right here. So that was our dealing range I used, my fault. And I used the OTE, the 0.705 OTE as my key level. OTE 0.705. All right, and then we also have this pre-manipulation liquidity pool, right? So there is sell stops resting below that. So there's our sell side liquidity, right? And then we'll mark out this range. Mark out the 50%. So that's how we set up our day for the trades. All right, this is our setups. Every day will look like this, just slightly different price action, but the concepts stay the same and stay consistent. So now let's look at the 5-minute time frame, and we will see what price does as we open up 9 a.m. All right, so 9 a.m. opens here. We can mark that out. And what are we expecting for 9 a.m. if we're expecting a bullish day? We're expecting a 9 a.m. open, low, high close. Okay, so we start selling off. This is good. We want to see this dig into this key level. We want to see it take out this liquidity under midnight, right? Because if it's a daily, this is the daily open. We want to see a daily open, low, high close, right? Because we're bullish. So 9 a.m. is also confirming that. So boom. We sell off here aggressively. We take out this liquidity. Now this is inducing people to go short. They're like, oh no, market open, 9 o'clock, we're selling, we're going to go short because this whole bearish day, they're thinking we're going to continue that bearish price action, but they were false. They were wrong. So what happens down here? Let's look at the 1 minute time frame. Now this is where I got tripped up, right? And I'm going to go over my mistake and how I can fix it for myself. So if you guys, if you guys have the same issues, I'm going to tell you what happened here. So price dug into this level, right? Here's our key level, which is the OTE. And my thought process here, this is the wrong thought process, but I'm going to let you know what I was thinking, right? So if you look on the 15-minute time frame, before this next candle opened, I was watching the 15-minute, and I wanted to see this 15-minute close hard in here, right? I wanted to dig deep and close with a little wick. All right, so I see that, right? I'm timing it. I'm watching the countdown to bar close. And the final minute ended up here. We see the 5-minute, boom, also dug down. So I'm expecting this candle right here, already have it in my mind that this is going to be a 5-minute order block, right? So this is what I was thinking. I was thinking this is going to be the 5-minute order block because it's taking out this low, this sell side, and hitting the key level. So when I saw this on the 1 minute, right, or before this happened, so right here, I saw a fractal 3-candle model, right? So if you were looking at the 15-second or 30-second time frame, this would be your candle 1. This would be your candle 2. So your turtle soup, your model 1 on a 15-second, 30-second time frame would be here, right? So your turtle soup would have been down there. So I entered when I saw this strong reaction and then a dip back into candle 1, right? Now this was wrong thinking on my end, because simply for the fact that this candle right here, it never closed below all the price action. There was just wicks, wick, wick. What you want to see for a proper turtle soup is a bar closing below all the price. So then also we can see if we mark out that 15-minute low, right? So before this candle, here's what we're looking at. We want to see this get swept a second time. I'm not sure exactly why this happens, but it's just a phenomenon that occurs in price at the lows, right? So like you can see right here, see this low and boom, we swept it a second time. So you want to see this get swept, especially if you don't see this close below. Now I hope that makes sense. So we want to see that candle now get turtle souped with a real fake market structure shift and a proper model 1. And boom, we sell off. And then I get stopped, and this candle right here, that's your turtle soup candle, because it closed below all this price action, right? It false breaks below, tripping people out, and then we get this candle that instantly rebalances. It doesn't get a close above right here, but this was strong enough, so the real entry would have been right there, right? There's your model 1, because this candle liquidated the low of the 15-minute before it, broke above it, taps into that order block, and immediately rebalances. So that's your entry, right? I missed this, but that's okay because there's always more trades, you know? Just manage your risk and stay consistent with your sizing. So 22-point stop loss. And now where are your targets for this? First target, always 50% of the range you're trading. So here's the range, 50% right here. That's your target 1. Already a 1 to 7 risk reward with a 158-point target. Target 2 would be these highs right here. So you got a 1 to 11 risk reward trade. And let's see how price reacts after it hits that order block, right? So we instantly get displacement to the upside, right? We start breaking these highs. So order flow has shifted, right? We're bullish. We're using this fair value gap right here. We tap into it, and we are just moving to the upside. All All right, we're still breaking, so we're rejecting lows and breaking highs. You can see right there, you hit your target one. So from 950, so 10 minutes, and you're already 160 points in profit. All right, and then we have our true market structure shift right here. All right, and then let's look at the, well, first let's let this play out a little bit more. Boom, 50%, right? And you can see we get a small reaction off of this. We take out this liquidity, and we get a small retrace. That could have been your second entry. I mean, not really. I wouldn't have entered there. But let's put that back. So yeah, the 50%, you get a little bit of a reaction, and then ultimately we hit the high. So your target hits fully 950. So 23 minutes and you're 300 plus points in profit. This is the, the power of CRT. So your entry could have been way down here at this order block. Right? There's your entry. We'll catch it next time. You miss, you catch next time. All right, and let's look at the 5-minute time frame. So this 5-minute candle that I originally pointed out, that I said I wanted to see that be the 5-minute order block, never got retraced into, and that's okay, but it did break above it. You can see this is, Romeo always talks about it, the types of reactions off a key level. You can either have a V, a W, or multiple touches like that. So this was the V, and you can also see it was a I forget what type of CRT he calls it, but it was basically, it completed the whole objective in one candle. So there was no candle 2, 3. It was just candle 1, candle 2 takes out the low and the high. So this is the fastest kind of CRT when you have the V shape, all right, the V reaction. You see the market structure shift. If we look at the 15-minute time frame, you get the proper turtle soup false break below, and you can see right there, that's where you would sweep. You get your Model 1 entry right there, and yeah, you're taking out these equal highs right here, and the rest of the day played out. Boom, after you hit the high, you get a little reaction, and we're continuing. So with this in mind, what am I thinking for Wednesday? So for Wednesday, I'm expecting just a classic buy day, targeting this new week opening gap, right? That's what I want to see filled, or just another 4-hour candle, 50% and the high, because that's your system. So boom, looking at this from this perspective, you see we have this accumulation, fake market structure shift, stopping everybody out into your key level, the OTE, sell side liquidity, pre-manipulation liquidity pool, turtle soup. You can see we sweep that candle a second time. So keep that in mind when you're looking at these kind of setups. Profit at 50%, the high, and then if you have runners, leave runners. And that is all that I really have for today. That's my review. Again, the mistake that I made today was I jumped the gun because I saw this reacting off my key level. Made up some bullshit about this 1-minute 3-candle model, but it never closed below. So that was my mistake of the day, and that's okay. We'll catch it next time. So hope this helps y'all out, and I'll be back tomorrow probably. See ya.